Hello, this is Jordan. This video is being recorded on the evening of Wednesday, April 3rd, 2024. Thank you so much for tuning in today. In this video, I'm going to talk about gold and why it could hit $5,000 an ounce sometime in 2026. Now, I've talked about the technicals a lot in the past. I'm going to get more into that. Fundamentally, I'll just say that we need to have a recession and a downturn in the economy in the next couple of years for this to happen. If that doesn't happen, then I think gold has less upside potential. So let's get into it in a couple charts. Okay, so here's the history of gold, and what we're looking at here as far as my annotations are what I deem as the cyclical bull moves in gold. I annotated how long they lasted, and then you can see the percentages. Now, there's a couple things that stand out to me. One, you have the differences between the two secular bull markets, one in the 1970s, one in the 2000s. Now, in the 1970s, you had two huge and sharp cyclical moves. In the 2000s, this was more steady. I mean, the biggest downturn was this 2008 correction, and this lasted only 6 months. It felt a lot longer than that. 30% decline for 6 months. But other than that, you had a correction here after this big move into the middle of 2006, and you had, this kind of consolidation here, but you didn't have this sharp move in the 2000s. So 1970s was sharper cyclical moves, and then you had more steady moves in the 2000s that weren't quite as big. And I also deem this a cyclical bull here. Something like this, and then the 2016 here. These to me are not long enough for a cyclical bull. Those are short covering rallies, more or less. And this was also a cyclical bull, August of 2018 to August of 2020. Now, this was 464%. And then, of course, this was over 700%, an over eightfold move. And this was a little bit artificial because we know that based on the action in the gold stocks in the 1960s, if gold was freely traded prior to this, you wouldn't have had this sharp of a move. Getting into where we are here and now, cup and handle, it's beautifully bullish. Talked about that numerous times. This cyclical move, I'm expecting something. It should be stronger than all these moves. 170%, 173%. I think it's going to be stronger than these moves, but probably not as strong as these moves. So 464%, 717, then you have these that are 170, 173. So maybe something that's 200, 250%. And I'll get into this in the next slide, but it also depends. Am I measuring it from the 23 low here or the 22 low? So I'll get into that into the next chart. So this chart, the gold bull analog chart, this chart shows all of those cyclical moves, well, at least most of them, plotted on the same scale. So they're plotted on the scale of gold's bottom in October 2023, and I think the weekly low was 1845 an ounce. So they're plotted on that scale, so we can see if this current move, if it's a carbon copy of some of these moves, where it could go. But this will also help us evaluate gold's performance going forward. And so I think we are right about here. It's this black light. So we're right about here. Now, this is the 2004 move right here. And I think this is the 2005 move. So this move is from basically 2004 to 2008. That's cyclical move. But this move is from 05 to 08. So this move is if you start the move in the middle of 05, May 05. I think this starts at May 04. So, of course, this was a bigger move, but gold, it wasn't that big of a move the first year. So if we started at 2005, we're right here. And so that move, call it the mid 4,000s. Now, these other three moves here, you have the 1970. This is the 1976. So this is off the chart. It's way off the chart. I had to cut it down here or else you can't even see this. So 76 to 80, way off the chart. Then you have this, the 70 to 74 move, which I think also is off the chart. So you have those two. But then you have the 2008 move. I think this is the 2008 move. So that was less than 3 years. And so this comes into play just above 4,600. Now remember, I think this is the 2005 move. So these are similar. The timing, again, puts these in 26. I cut off these two moves, so I think they may have gone a little bit farther than 26. But so this gives you an idea of, yeah, if we just repeat, if this move just duplicates the 2008 and 2005 move, so this is 2008 to 2011, this is 05 to 08, a duplication puts it pretty close to 5,000 an ounce in 2026. And the timing here looks to be, so that's summer of 26. So that's about 3 years. I want to go back for a second. And if you notice one thing about the length of these cyclical moves, okay, so this is 4 years. But if you started this move, because we're starting it in 70, if we started this move like in 71, when gold really started to take off, that would be less than 4 years. This is 3 years, 2 years, 9, 2 years, 9 months, 3 years, 9 months, 2 years, 9, 2 years. So what am I getting into with all this counting and talking is 3 years seems to be a pretty good time for how long the cyclical bull could last. Now, I would say 3 years from here, the 2023 low. Now, if we're counting from the October 22 low, then you could see something, I think, that lasts more than 3 years and 4 years. So 4 years from the 22 low puts you towards the end of 26, 3 years from the 23, end of 26. So that's how I get into 3 years. That's how I think about 2026 as a time frame. Okay, last chart. This is pretty interesting. This is from sentimenttrader.com. Jason from sentimenttrader.com tweeted it out. They do really great work. He does great work, great statistical work and sentiment work. And so these dots show gold after half of trading days in the past month were at an all-time high. So it's basically showing really strong momentum. And there's various dots. There's a dot here, a dot here. There's a dot here. There's various dots. But one thing that I threw in here is, okay, let's look at the dots after a major breakout. So this was like a 3-year breakout, 3 year, maybe a little bit more. So gold was at 240 when this registered. Then, of course, it went parabolic to 880, 850. So that was a massive move higher. Gold was at about 1,200 when this signal was given. So 1,200, then it went to 1,900. So that was 56, 57% move in, I think, about 2 years or a little bit less than 2 years. So if gold duplicated this move based on where it is here and now, I think it would get to about 3,700 within 2 years. So that would be 2026. But, I think the setup is more bullish. It's a lot more bullish than gold right here because you're coming off this 13-year cup and handle. If gold hasn't gone anywhere for 3.5 years, it's a 13-year pattern. It's at the same, basically only a little bit above where it was 13 years ago. This here, gold had already moved quite a bit. So this was like a last gasp at the end of the secular bull. This was the end of the secular bull as well. So I don't think we're going to make that kind of a move, but I think it will be stronger than this. So for all these reasons, and another thing I want to get into, last thing here before I sign off is, and I'm going to link a video in the description. If you look at various cup and handle patterns historically, they go to the measured upside target, they go to the log target, which for gold is around 4,000, but they end up going beyond that. So factor in all these things. That's why I'm looking for 5,000 an ounce in 2026. Let me know what you think in the comments. And 5,000 an ounce in 2026, that could get us pretty close to $100 silver. What do you think about that? Let me know in the comments. See you guys again in the next video.